Gautam Shah, Associate Director and Technical Analyst with JM Financial Service joins us. Gautam, bit of a scare in last 2 days. Could we be staring at more meaningful downside on Nifty?
Well, looks like I think the markets have been on a weak wicket, since the first week of August. And this higher high that we saw a couple of weeks back closer to the 10,200 mark, I thought that was the weakest higher high in the last 8 months because you did not have any technical study supporting the same. And what was interesting to note is while the large caps saw a pretty muted rally, the mid caps and small caps actually ran away, and you had a scenario wherein C grade and D grade stocks also started to do phenomenally well. So all of it indicated that markets are possibly moving towards a short-term top, and with what has happened last Friday and what's happening today, it does seem as if we have indeed made a sort of a ceiling for the markets, at least for the near term. However, I think it looks a little overdone for the extreme short term, so we could see the Nifty seeing a lot of support in that 9800, 9850 area, so possibly a bounce from there. But the overall setup, I think a bigger picture seen is still quite negative, and I think this might just be the first meaningful correction of 2017, wherein the Nifty loses anywhere between 5 to 10%, something that we've not seen for about 9-10 months. And if it happens, it's only going to be healthy, because even if you go back to the 2003-2007 bull market, 5, 10, 15% corrections within a bull market is quite normal. So if the market were to lose a little bit of that, I think it's only going to make the scenario healthier, and then we can possibly start the next phase of the bull market. But I think for the next 4 to 6 weeks, I think the markets are likely to remain under pressure. Geopolitical risks are a huge risk at this juncture, and locally, people talk about liquidity. I don't think that's an angle that's going to work in a market which is as weak as it's looking today on the screen, or what happened last Friday.
Gautam, hi, morning. It's more relentless for the small caps, as would typically be the case, considering the run-up has been pretty hard in the side markets as well. Where do you suspect caution, and do you think the sell-off is going to be across the board when it comes to small caps, or do you think that it's going to be more in pockets, the recent IPOs, some of the richly valued spaces, and some of the more trading favorites, the likes of a JP, Infibeam, which is collapsing as I speak right now, etc., etc.?
I think it's going to be more in the trading favorites, because obviously every second person on the street is talking about the SIP money that is coming in every month, and that money is only going to chase some of the best stocks in the market. So I don't think the large caps are going to get that sort of hammering, but I'm very, very concerned with the way the mid caps and small caps are shaping up. The kind of higher high that they saw a week back, and the way in which they have collapsed in 2 days, it's quite worrying. And I don't think there is any reason to be buying this decline just yet. I think the mid caps can lose as much as 10 to 12% in a very short span of time. So if the index were to lose 10%, you would have stocks losing anywhere between 10 to 30%. And if that happens, it's going to be extremely damaging. So in the mid cap space, yes, across the board. But if you are looking at a space to hide, I think it's only pharma. I think apart from the pharma sector, no other sector in the market has even a reasonably good setup. So pharma could outperform after a very, very long time. But otherwise, I think banks, capital goods, autos, metals, I think all are likely to come under pressure in the near term.
Oh, if that's the case, what will hold out? Because the rupee's also been losing ground. I don't know if you've seen the charts of the currency. Would there be an inverse relation to IT stocks there?
Well, IT stocks have actually done nothing in the last 8 months. If you look at the CNX IT index, it's been stuck in that 10,000, 11,000 band. So the only outperformance that you can see is that the IT index might just remain sideways. It might not go up, it might not go down. And I wouldn't want to correlate with what the rupee has done with the equity markets, because I don't think that correlation exists right now. What was a little surprising is that the dollar index, collapsed from 102 to about 90. It depreciated against, the US dollar depreciated against just about every other currency. But somehow the Indian currency managed to stay above that level of 63, which was a little surprising. And that's probably the reason you've seen such a quick snap back to levels, at around current levels. So that correlation does not exist, and IT I think might only outperform by just staying sideways, but broadly I think the overall market setup is still quite negative.
What are the chances that we've peaked out on the Nifty for the year? And in the month of October, November, December, we may actually not see a meaningful move on the Nifty.
Yes, I think that's my view. I think we've had a phenomenal run in the last 8 months. The market is up 25% without even a 3.5% correction. October, if you look at it seasonally, has a terrible track record, and this is a track record that we've seen for the last 20-25 years. Geopolitical situation is not great. The US market is looking extremely toppish at this point of time. India VIX is still looking quite relaxed at that level of around 12.5, 13. It generally tops out when it tests the level of 17, 18. So yes, there is a case to believe that over the next 2 to 3 months, you could not see the markets making a higher high. If that happens, again, as I say, it's normal. I mean, doing nothing for 2.5 months is actually a good thing from a medium-term perspective. It's not that the bull market is got over. It's just that you need an intermission before you actually start the second half, and I think that intermission has started off.
Right. We've been talking about how some of the financials have been doing really well. The housing finance companies are getting a bit dented today. I don't know how much to make of the fall there. How are you looking at the housing finance entities?
Well, the housing finance, companies have been the poster boys in this entire rally. Phenomenal wealth creation there. Somebody who bought and held on to, and I think at these levels, clearly they are looking quite toppish. They are looking extremely top heavy. And it's only fair that they lose about 7, 10, 15% from current levels. It's not that the businesses are going to come to an end. It's not that the long-term trend has changed. But just because there is a little bit of froth in that sector, I think losing ground to about 10% is fair to expect. And people who did not get into these stocks in the first place in the last 6-8 months, I think they will get an excellent opportunity to enter sometime in the second half of October. So one should not hurry into getting into them just because they have seen such a large correction in the last few days. Some more downside, and I think investors can start looking at it once again.
Okay. Right. Gautam, you've talked about as to what's going to cave in this market, and you've talked about the fact that financials, autos, as well as the richly traded or richly valued pocket is going to collapse first. Is there any hiding space in this pocket? Of late, we're seeing this rally play out in pharmaceuticals and IT. FMCG, some are saying, could be a good defensive hiding space. Have you identified any such trend?
Well, early in the month of August, we had two spaces which we were recommending to our clients on the long side, irrespective of the market behavior, and that was metals and healthcare. Metals has actually completed its target. We were looking at 14,000 on the BSE metals index, so that has happened, and now we've turned negative on metals as well. So unfortunately, the only place where one could hide is really healthcare, because I think even FMCG stocks like ITC have really lost their leadership, and post GST, the scenario just seems to have changed overnight from some of these in some of these stocks, and the charts are really reflecting that. So apart from an HUL, I think most of the stocks in the FMCG space are quite negative. So I don't think you're going to get outperformance there. But healthcare, clearly with the kind of low that it tested a couple of weeks back, it looks like a multi-week, multi-month kind of a bottom. So that's one place where one could up their portfolio weightages, and you could hide in that space for the next 2.5 months.
Yeah, we've spoken about so many sectors. Now, I particularly also want to quiz you about some of the power and utilities as well as infrastructure themes. Trend-wise, is there anything that's standing out there? Because there is news about the government announcing stimulus later today. Do you think that there could be a shot in the arm technically for a lot of these underperformers?
Well, I am personally quite bullish on power, but that's a view from a medium-term to long-term perspective. And I think every decline in the power space should be used as a buying opportunity. But in the current market scenario, irrespective of the news flow, stocks cannot stand. I think it's almost like forced selling which is taking place in the marketplace. So I'm not very sure that the news flow will be able to bail out some of these stocks. But yes, medium-term, I think the structure is still very positive. I think power as a sector is in the nascent stage of a major major bull market. It's going to take time to really play out, and I think that that's more of a bigger picture, 2-year, 3-year kind of a view that we have. But for the short term, any decline of 3 to 5% in that space, I think, can be used to buy. Infrastructure reality, I'm not too sure, because what we've seen in the last few weeks is that some of the C grade, D grade, quality stocks have also done exceedingly well. That's usually a very worrying sign, and you are seeing the snapback happening very quickly.
Right. Gautam, such a pleasure having you today on the show. Thanks so much for trying to make sense of this panic which is currently emerging in the market.